pegging crude at $20 a barrel today. 34 is where NYMEX is currently trading. How much lower do you see prices headed?
Well, I think when we look at the state of the market and particularly the negative sentiment that's dominating, we can definitely see prices head somewhat lower. I think maybe not all the way down to 20, but the point is around many parts of the world we're having a very warm winter, and that's limiting demand, and that means storage levels, which are already full, are filling up fast. So even though supply is beginning to correct as a result of lower prices, oil supply is beginning to come off. That isn't yet showing up, and weakening demand in the last couple of months and the weak outlook for demand are dominating in trading at the moment.
So what is the next level that you see crude hitting, Richard? If you don't see it going all the way down to 20, what could be the next support, for instance, as far as prices are concerned?
Well, I think as we go into January, there are a few things, including the start of spring refinery maintenance and some contract changes on the Brent market in particular, that could take prices a few dollars lower. We could definitely go into the low 30s if we don't see any kind of catalyst for recovery. And the point to remember is that negative sentiment also means positioning is very short. It's quite one-sided. We've already seen a few bouts of short covering rallies, for instance, around the news that the US export ban was going to be lifted. That gave us a bit of short covering earlier in the week. So there is that potential, if we get a catalyst, a supply disruption, something unexpected, we could see quite a strong reversal in prices. But the most likely direction is a little bit lower until we get out of this rut of weak demand, warm weather.
So what's the probability of prices going all the way down to 20 at this point in time, Richard, given the scenario?
I think the probability is still reasonably low. There is, although there's weakness in diesel demand in particular, there is still a lot of strength in the light ends of the barrel. There is still storage space around the world, in particular in the US. We've filled a lot of storage up, the readily accessible storage, but we're not yet floating oil on tankers, which we were doing in the financial crisis a few years back. So there are still options for the market. We're more likely, I think, to see that weakness come through in time spreads in order to incentivize and enable floating storage if we continue to build up stocks rapidly. So I think the probability of going all the way down to 20 is still low.
All right, Richard Mallinson, appreciate you joining us here with your take on where crude prices could be headed a little bit lower, but perhaps not all the way down to 20, which is the forecast that's been put out by Goldman Sachs and CLSA today. Now, the drag